Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, just want to go over one of these kind of fake out dumps that we've had again on the charts, and as well as the continuation of the potentially bullish setup, right, with a lot of trappiness, as indicated in yesterday's title, Beware of the CME trap, right? So of course, if we just go over to the CME chart, we can see that we did have that pullback. And if we go ahead and look at the structure there, basically, the consideration here is, what if this really isn't the bottom of a channel, right? What if we're mostly in this kind of wedge formation, and that we're breaking down from this wedge formation? Let me go ahead and highlight it here. I'll just go ahead and make this one a solid line. Get a bit thicker there. And then let's go ahead and just diminish this green line. Just a second. And so if we're talking about this wedge, where this is the upper bound on our resistance, and then this is the bottom that we've basically been bouncing around on, then you can consider that we broke down and we retested the bottom, and that we could potentially, you know, fall all the way down to the bottom of this green channel, or, anywhere, in between there. And this was the CME trap that I was talking about yesterday, so that we had to be highly aware that this was likely to be possible, especially since we had this scamwick candle that bounced all the way to the top of this red line, came all the way back down, and then look, we did it again. We bounced all the way back up to the red line, and now we're coming down again. Are we going to continue down to the green line, or are we going to, basically travel along this kind of parabola that we seem to be forming here, right? This kind of convex curve. And perhaps this is going to be what takes us to those next levels, assuming that we're able to get to those next levels. Well, there's no guarantee of any of this. Of course, it's all just statistical, and that's why we have our first take profit up here, which delivered, a solid 7% from our entry as we played this move. Of course, the biggest, difficulty with this move to begin with was this dumpage to the bottom of this channel that was basically being carved out here, where we just had this massive candle to the downside, and then we had a massive candle to the upside. And that just threw a lot of the indicators off. It threw a lot of the longs and the shorts off. And, it's just hard to orient yourself in that type of a setup. So, of course, we are getting more volatile. Liquidity is drying up in the market, and you will see these market makers just trying to take your liquidity by liquidating everyone up and down. Whereas this wedge up here was a little bit more straightforward. We just chopped around in it. We busted out to the upside. We kind of consolidated above it, still using the bottom of the triangle as a support. And then when we had bad news, then we just, dropped to hell. But in this case, there seems to be a lot more whale games going on. The institutions trying to liquidate each other are really trying to step up their game. And so this is something that I've been warning about for a while. And so, the motto of this channel: always be taking your profits, always be selling. You don't need to be holding any long-term positions, to the upside in a macro downturn, where literally the only thing we have are lower lows and lower highs. And so we're not really doing anything different. And until we get a major change in trend, you can pretty much expect that we might even have another leg down, perhaps to 16,500, perhaps to 15,500, or even we could get into that danger zone of 14,000 to perhaps as low as we've seen 3,500. But you know Would I think that we are going to hit that low? Not necessarily. I do believe that this market will start to round out at some point, but the current trajectories are just very dangerous and to the downside. Do you understand? So again, like when we talk about these small time bullish trade setups, you have to understand that you have to be ready to get out of your trade at a moment's notice. On the Discord, of course, I am providing updates. So if you want to just go ahead and click the link in in the description of the video, you can see that I'll give updates to these type of setups. And in this case, I had mentioned in the Discord that Bitcoin was acting pretty weak, so we should probably get out of the trade. And, this was kind of a live update, so, you can't really just make a video just for those type of updates. But in this case, if you had been in the group, you could say you could see this post, Bitcoin acting weak on the money flow, and some indications are getting toppy. We also had a little bit of a double top there. So taking profit one, we had a solid 7% gain, after that scam wick, and so re-entering. After, when we re-entered the trade after the scam wick retraced. Overall, pretty good. No need to be greedy. And that's really how you should be approaching these trades. You don't want to be greedy. You want to take the lion's share of your profit when you hit those first resistances. If you make it above there and turn that resistance into support, then you can talk about taking the next trade. Then you take your money again. And if you turn that into support, then you can be talking about taking the next trade. And that's why we talk about these things in terms of levels. And then if you take out that one, then maybe you can be talking about the super bullish scenarios, right? Where you could potentially go to 28,000 or and whatnot. But until then, we're really just taking it baby step by baby step as we move upward in price. Because again, guys, the direction of this market is just to the downside. And so one tiny pop-up isn't really going to change anything, right? Like we have to get a series of pop-ups and then we have to get, higher lows and all of these things in order to really change the trend. And that's just a tremendous amount of money. It's a tremendous amount of work. It could take months and months. And so you don't want to get over bullish in these type of scenarios. But at the same time, we are traders, and so while there are many, many obvious, trades to the downside that we could have been playing, if you did want to just have any semblance of bullishness, especially as we approach these lower levels and people are going to start wondering, is there the possibility that we could turn around? Should I even attempt to buy anything? My position is still, personally, I'm not buying anything to hold right now, but I am becoming more and more willing to take long positions just in case there is good news in the market and we end up being sent somehow. But overall, I'm still relatively bearish, and I do believe that this market has a lot more to grind out, probably through September to maybe October, then maybe a bit of a brief respite for the midterm elections, politics, and the Federal Reserve. They tend to revolve around each other, and so there tends to be some openings, some breathing space around election time so people can just think about stuff. And then maybe they'll resume in 2023, or potentially that'll be the end of it, right? And maybe we'll just bottom out around that fall time. If I sound a little bit nasally today, sorry about that. With all the fireworks last night, my allergies are acting up this morning. Of course, we didn't really put in anything super bearish, right? We actually just made a higher low. So Although the trap did get released, we did break down from our micro uptrend on the local level here. That's really nothing unusual, right? Like that's usually how price action works. Up, down, up, down, up, down, right? That we should expect that. And so that's why we should always be moving our stop losses up whenever you get to a price target that's suitable for your risk. So for example, we had this double bottom here at on the first and the fourth, right? Or the third rather. And so that was a good indication that if you didn't get in by that higher low, then you could have gotten in by the second higher low, and that double bottom just made it a little bit stronger. The RSI did, suggest that there could be potential there. And so if you took that trade, then you would have set your stop loss at this resistance that's been, just very successful for basically a month, right? And so that would have been a logical point to take the majority of your profit. And then if we could get on top of that 20,000, then that's what you really would want to see for some more bullishness to continue. Otherwise, we have to consider that, just like I said in the last couple episodes, that we may just be trapped in this channel to the downside, or perhaps just get stuck here for a little while. And that seems to be what we're doing. So now the market is going to decide, does it explore the bottom of the channel, or does it try to get back above this $20,000 area? Now that the wedge has been completed, right? There's no more room in this wedge. So basically the price action can bypass the wedge, get into a support area that it's kind of built up here, if the market does end up turning bullish. And so we'll be looking for that. We'll be looking to see if this market takes a direction up or takes a direction down. But primarily, you want some type of validations. So if you break your lows here around that 18,800, then you can pretty much expect that we're going lower. And in order to be pretty bullish for the next level, you would want to see us sitting on top of 20,500, preferably, as I've said in the previous two episodes. And we're no longer playing this wedge. We're literally just playing the downward channel and then this next area above us, like right above that channel. So these are important considerations while you're looking at the Bitcoin CME chart. That's the game plan. And of course, always be moving your stop losses up if you're going long, or move them down if you're going short. Because if you entered here, then as soon as you started to get a little consolidation patch up here, you probably wanted to put your stop loss under that. As soon as we got a pop up here, started consolidating at that resistance, you probably wanted to put your stop loss there. And so, having a trailing stop loss that follows your price is really important in order for you to keep your profit. So in case you fall asleep or go to dinner or whatnot, you just get stopped out of the market and, no issue, right? As opposed to not having a stop loss, in which case you just lost the majority of the trade that you took if you entered down here with me when we re-entered the trade based upon the retrace of that crazy God candle, right? So that's basically the trade that we've been in for the last couple days, and which we've been hunting down for the last couple weeks. So far, we've made 7% on it. If we do look bullish, perhaps we can make more. If we look bearish, then you guys can short. Let's see. Let's go ahead and go over to the 24-hour exchange just to see how this looks different over here. Of course, on the 24-hour exchanges, we didn't really have the same channel. It was just a bit of a distortion because we had this push down all the way down to 17,500-ish, which we didn't have on the CME chart. And so really the bottom of this area got violated quite strongly. And the reason I drew out the lines like this is because I'm trying to create an analogy with the area up here. And the thing that was very interesting about the area up there is that you can see this the support that was basically put in as a midline ended up being support across this whole macro channel. So you can see this macro channel to the downside, and so that that midline right there ended up being support all the way across. And I'm just playing around with this concept. This isn't a proper way of charting or anything. I'm just playing around with the concept that maybe that midline that was being established here, sort of like we got established over here, is going to support us along across this way. Now, it may be time to redraw that midline. Maybe that midline is something more like this now, right? And so we have to consider these things and update, these conceptualizations as we go along, because the market is going to be different each time. You can't really just take a fractal and just assume it's going to play out the same exact way in the next instance down. But in this case, they've been behaving very similarly. It's just that this one does seem to be does appear to be pointed a bit more dramatically down. And if we consider this break to the upside right here as similar to the break to the upside over there, let me go on a higher time frame, maybe make these candles a little bit fatter. Right, if we consider this area right here to be very similar to this kind of pop-up that we got right here, then maybe the move, the rest of the moves are going to be just weaker, and maybe, this kind of downward general direction that we have, whereas this one was upward, is going to be important if we are playing the long side. Just to keep that in mind. This is becoming a big distortion of this one. And while in the beginning they had a very similar setup, right? Let's see, like this, very similar setup. It's now become very apparent that this one is breaking down, whereas this one kept going sideways, and up. This one has been going down and sideways. And so we just have to take a little extra caution and take the majority of our profits earlier on, because we may not reach these levels. I mean, it's still possible that we do, but we may not reach those levels before the politics changes. And of course, tomorrow there's going to be the reading of the FOMC minutes. Basically, that's the Federal Reserve decision-making process, just a little bit more insight into their thinking. And if it's bad news, then of course, this market could take a little bit of a more tumble to the downside. However, if it's good news, then perhaps, we just, have that chance to pop up that we've kind of been missing out on. Let me go ahead and try to see if I can grab the economic calendar there. Yep, and you can see that yep, tomorrow at 2 p.m. we'll have the FOMC minutes, and they're just going to clarify some of their positions, some of their thought process. It's really not making new decisions, it just clarifies their thought process. And then for the rest of the week, we're going to have jobless claims, some smaller Fed chairman will speak, and then we're going to get some consumer credit and employment data. So, it's not the biggest week in terms of news, but you can understand that the minutes tomorrow could perhaps just throw some type of wrench in the way that people are thinking. And then really it's going to be the week after this one, so next week, where we're going to get the core CPI data and the CPI data, which could bias the Fed's thinking quite a bit. Originally, I was trying to be a little bit more bullish because as we go down in price, it makes more sense to become more bullish the further down in price that you go, because at some point you bottom out and you have to turn back up. And so if I sounded really bearish at the top of the market, that was natural also. You should be highly skeptical at the top of the market that you're going to turn around to the downside. But at the same point, at the same time, when you're at the bottom of the market or the lower that you get, you should start to be more open-minded to bullish setups, which is what, of course, I'm trying to do. And while in the beginning you're not going to hit all of your targets because pressure is going to remain pretty powerfully to the downside with a huge momentum, against you. Sooner or later, you're going to get a relief bounce, and you're going to get a really, really great relief bounce. Additionally, the market could just end up turning around, and you don't want to be one of those people that just left the market or, is just, permanently set in a bearish mentality. You want to have that open-mindedness to the possibility of some upside and to not bias yourself. So just as I'm thinking about this wedge here, I mean, this is an imperfect science to begin with. I think that we can actually just redraw this one in a way that, I mean, it's very difficult to get a clear view on this type of a choppy action, right? It's just so choppy. But if we were to just do our best, and now that we have a new high to play with right here, right, where we ended up taking profit, then we can kind of see how this wedge might be playing out and how it could still be extending across this kind of macro channel that we have going on here, but that it just might be super, super dramatic compared to this one across here, because this is the midline. And then we may have this, this kind of upward direction here, which still might play out, but there just might be something totally different going on. So this structure up here has broken down. We're now doing our own thing, and I think it's going to be important to no longer use analogies from over here. And what we're really going to want to be looking at is just the price action as it really is, not as what we would like it to be. And one of the reasons why catching this move could have been so enticing is that was a nice 13% move to the upside, this pump over here. And so if we did get a pump similar to this one, 13% is nothing to sneeze at. And your alts could have gone crazy, like the market could have gone crazy during that type of a pump, and then perhaps there would be, a little bit of a bounce after it, which we could catch. And so those would have been very good trades to the upside. But based upon the bad behavior of the price action so far, and I think a lot of the whale games pushing the prices down, those type of things, it's just becoming less and less feasible to think that we could reach this third, line up here. And if we are traveling on this diagonal in a more dramatic way to the downside, which has, basically been proven by this kind of chop that we put in over here, we have to just temper our expectations. Maybe this really was, the limit of what this price action can reach. Maybe we do something like this, right? Or perhaps even fall down before then, as this pattern perhaps just weakens. And one of the ways to conceptualize this is, let me just delete these doodles. One of the ways to conceptualize this is if we look up here, we can see that when we initially broke into this channel, we basically hugged the top, right? See that? And then we broke all the way down. And then basically we ended up doing some type of reversal. You can kind of see that. It's just kind of like a reversal play. And now it's possible that what we're doing is hugging the bottom. And so I want you guys to be very aware that we could be doing something like this. and that this channel may have just flipped its bias. And so to expect that we're going to test the top of the channel might be as unrealistic as expecting that we were going to test the bottom of the channel right here, right? We didn't do that in this case, and we might not do it in this case. So you are going to want to be aware that this market is turning increasingly bearish as we drive down, and that the next drive down could be sooner than some people who are just looking at this channel, or other channels that they may be, drawing out, might be ready for. And so I want you guys to be ready for the trap door in case it opens. But at the same time, we have to take all of this with a grain of salt because, we could just be putting in, some type of uh, just indecision triangle that could, take us up at the same time, right? It's not like this is any obvious direction being set up here. It's really being contained within this wedge. And so we're going to have to find out if we break to the upside or to the downside. And if you look at it from this perspective, you can see we're really just in the middle of the channel. And so what do we normally think of when we're in the middle of the channel? Well, you don't necessarily want to be taking the trade, right? You want to be taking the trade at the bottom of the channel or at the top of the channel. But when you're in the very middle, there's no real clear direction, right? You don't really know which way the market is going to take you. It could take you all the way down, or it could take you up, right? So it could take you down, or it could take you up. But if you're at the top of the channel, most likely you're going to head to the downside, even if you only capture half the move. You could potentially find yourself going all the way down to the bottom of the channel. And if you're at the bottom of the channel, you could have a pump up, maybe only halfway up the channel, but conceivably you could end up, getting all the way to the top of the channel. And so that's why the top of the channel and the bottom of the channel are the best places to be taking your trades, not in the dead middle here. And so as we, clean up our chart here, you can just again visualize that we're in the middle of this macro channel, and it's fair to say that you have no idea if you're going to be going, up or down. Okay, so just temper all of your expectations and really control your stop losses and really take your profit at whatever point you can if you're long in a macro downtrend. Sorry to emphasize that so much, but there is a certain degree of responsibility that has to be taken, if you're going to be talking about these type of setups on a YouTube, because there could be vulnerable people who don't learn these lessons. Of course, I've said all of these things before in previous videos, but it's important to repeat it just every once in a while. It doesn't have to be said every episode, but as different viewers might come and go, it's important to go over some of those basic things. And if you guys want to see like what this was really caused by, you can the drop. You can see this just gigantic, launching of the dollar. And I'm not 100% sure what that's about. I haven't researched it yet, but we just got a tremendous boost in the dollar strength, basically overnight. Um, happy 4th of July, I guess. But that pop up, it wasn't necessarily it didn't necessarily have to happen last night. We could have chopped around to the bottom of this level. We could have broken down. This was a lower high here compared to this area. And so we could have done something, like this, where we just kind of chopped down and kind of, grinded down and then came back up. But at the same time, you can see that this chart overall is bullish, right? Quite the opposite of Bitcoin. And so having a bias to the upside is something that I've been mentioning to you guys, over and over again, and that we are entering that kind of capitulatory area, which I warned about in the last video and a couple of the videos before that, where, when we get through this area and then break above there, probably the market is, really capitulating. And this sudden pop-up is just evidence of that. So guys, be aware that as the dollar gains strength, these assets that are traded against it might be weakening. And this does start to look like a head and shoulders being put here, which could have some type of a measured move to the upside, perhaps to my red line here around 108, right? So if you guys are paying attention to this, then just understand that we could potentially have some more volatility in the days to come, and that there might be a capitulation type event that could be coming up. So just be aware. This thing doesn't have to continue going. It can check back anytime. Foreign markets kind of show a little bit of strength. Maybe Japan or Europe suddenly shows a little bit of strength or has some good news, then the dollar might back off a bit. But right now, the dollar, which most of this crypto is traded against, it's just skyrocketing, just making it a little bit more difficult. And if we check the VIX, the scenario that I was mentioning does seem to be starting to play out, which is while we had a little bit of easy trading for the last couple weeks as volatility went down or sideways, we are starting to curve out, and I think that there is the possibility that we start to pop up soon. And so just expect some volatility, expect some type of uneasy trading conditions, especially as we cross this 30 line, this 31 line in volatility. Increased volatility is pretty much bad for the market. I've gone over this 100 times, and I'm one of the people that originally started using this VIX as an indicator when the market started to turn around, and that's because I understood the impact of traditional markets and the Federal Reserve and all of these things on Bitcoin, whereas others were just trading as if we were in a simple Bitcoin cycle, crypto cycle. I intuitively understood that we are in a stocks, macro cycle, a stocks super cycle, which would just be incredibly punishing to crypto. And so now we have to think about the Federal Reserve, we have to think about wars, we have to think about, the S&P volatility, we have to think about the dollar, we have to think about all of these different things. And we cannot just rely solely on Bitcoin to give us our direction anymore, which is why I jump over to stocks quite a bit. And if we do just head over to stocks, basically they're just doing what I suggested that they might do, just chopping out this area. And while I had hoped for perhaps some type of bullish lift, which does look like it could still be possible, I did mention several times that there's the possibility that we could explore the bottom of the channel before we get any type of pop, and that if we have bad news, we would really have to be aware of that like $11,000 level on the Nasdaq 100, because of course we do have more capitulation to go, and we might find support at one of these lower levels, perhaps down here at 9,000-ish, 9,500, or perhaps maybe 10,500-ish, right? In those type of areas, we don't know before we get some type of rally. It's just you can't take anything for granted, and you really have to just continuously be updating your knowledge on where these things are. Of course, it's really kind of pointless because all of the indices are trading together. It's really pointless to go over them one by one, but you can see they're all pretty much doing the same thing. You do see that slight bullishness that I was looking for, right? Um, it's not like we've dropped to hell or anything. We're just kind of chopping out that middle area, and we could still pop up, perhaps to take out this CME gap on SPY, the S&P 500. And that would be approximately 398, that $400 area. And so we're just looking for that. We're looking for the possibility of a pop-up that's going to give us that trade in crypto that we want, even if we end up being sent back down on a capitulation. Now, the question is the market so bearish that it just explores the downside and totally skips filling in that gap on the S&P 500? I would argue that it's highly unlikely. These markets do like to fill in those gaps, and so I'm going to continue to have a slightly bullish on the very short time frame perspective until we actually violate this low, or until we chop out this range and get up to fill this CME gap. Once that gap is filled, then I'm going to resume my bearish bias, because I just don't see any motivation for us just to randomly pop up unless we get good news on the CPI data next week. Of course, S&P mini futures basically doing the same thing, just chopping around. You can see a little bit more of that lower high, but also that higher low that's been put in. And right now it has a double bottom on it, which could be positive for the upside. But being a lower high, it's also in the spirit of this overall downtrend. And so again, you just can't be too bullish in a macro downtrend. You have to be constantly aware of what's going on. And ultimately, we are still just in the middle of this, this kind of support and resistance zone where you really want to get up here, in order to be really bullish. But we're just down here in the middle, floating around. We've been floating around there for a couple days, just chopping it out. The market is trying to kind of figure out that recession data, that GDP data, the the war updates, and is kind of waiting for the CPI data and the Federal Reserve to make a decision. They're just very risk off these days, right? So we're just not seeing, the price movement that would be very exciting. But of course, as people leave the market in crypto, that is increasing volatility. And so the institutions trying to liquidate everyone, just have more and more ability to do so. And if we go down to the short time frame, you can see Bitcoin is trying again. It is still in that kind of middle of the range, um, just no man's land. Uh, if we go to the daily, I guess we can take a look at the current CME setup, and you can see I don't have to really say too much. You can see what's going on here. Just follow the curve with me briefly, okay? So we expanded to the downside, and then we contracted to a kind of pump, all right? And then we expanded again to the downside, and we're in the middle of a contraction, which suggests that that pump is possible to still have, right? Like these other take profit areas that I have, it is possible that we could get to those areas if this contraction continues for the next couple days. But just understand that the contraction itself, um, it doesn't necessarily imply any particular price level. I understand that there can be data that goes along with it, but we've had setups like this very similarly back in the capitulation phase of 2018, and also in some type of downtrend areas in 2019. So when we look at this type of setup, although it may imply, there's a lot of bars, maxed out bars being printed on this, this kind of corrective move that could suggest it could be a mega corrective move. It doesn't necessarily have to play out. And if we look at 2018, we ended up just kind of fizzling out to the downside in capitulation. So I'm not going to overemphasize the upside in a macro downtrend, but just to mention that the case for this bullishness isn't over yet, and it's not going to be over yet until we get across to the downside, pardon me, across to the upside after completing the move to the downside. And we just haven't completed it yet. So again, if you see us popping up, you know, and if you see me leaving these areas on the chart, even though we got our 7% trade, um, there is the possibility that we continue to creep up here and, maybe we just get slapped down again, but potentially we could get there until, some type of news next week either sends us or, just slaps us down hard, right? So just be very careful, guys. I think that I've drawn this out enough. Um, let's see here. Is there something else to look at? Let's take a look at USDT. Perhaps just go to the weekly log. No, let's take a look at the daily. Just chopping around. So again, just in that middle area, you can see this range and just in the middle area. So people are neither fleeing to USDT nor are they, getting back into crypto, just kind of chopping it out, trying to decide what's going to happen next. We talked about the VIX and the dollar, went over stocks a bit. We can see Ethereum is just struggling to hold on to its dominance, which broke down considerably. And BTC dominance, is just hovering down in that higher low area here. If we draw a bit of a trend, perhaps it's going to pop up again. And in my mind, that could imply something a bit scary. So it could mean that Bitcoin is going to just launch, and maybe Bitcoin just takes off to the upside, but it can also mean that Bitcoin takes off to the downside and everyone gets so scared that of course they leave all of their altcoin positions. And so Bitcoin dominance increases, so either Bitcoin, pumps, I just would expect a Bitcoin pump to come up soon. Um, this doesn't look like it necessarily wants to break down to me. I feel like there's some type of slowing in the momentum. You can see it's starting to curve the way that it kind of curves typically at bottoms or turnarounds. And so, anyway, there's not much to say about the Bitcoin dominance right now. Just be aware that it could suddenly pump up and that could be bad for alts. Let's see here. Yeah, so it is prepared to just kind of explore some upside there. Looks like it's getting a fresh cross on its MACD. And so it does look like it's potentially ready to turn to the upside, and Bitcoin is going to get a little bit more play than the altcoins coming up pretty soon. Let's go ahead and look at the 24/7 Bitcoin. So basically the same thing as CME, just a little bit more complicated here. This is it's a very weird formation. So I give priority to CME, the professional exchanges, over the 24-hour exchanges, just because there are a lot of whale games going on in the 24-hour markets. So I'm not 100% sure how to. I mean, I guess we could say we expanded to the downside, we contracted to the upside, but then it flipped. It flipped and we started to contract to the downside, and then we expanded to the upside. So if this does continue to curve up, maybe that just implies that we expand to the upside, or maybe it's going to flip again. This is just a very sloppy. Volatility is direction neutral, and so you do have to consider several things when you take a look at it. For example, is the Stokes pointed up or down? What's the market structure? And in this case, it's pointed down on the 24/7 exchanges on the daily, which isn't necessarily a good thing. But on the CME chart, you can see we're just kind of hovering around the bottom, but we are pointed to the upside, which gives us some hope that we could potentially have, this continued contraction to the upside. But the exchange formats are in conflict with each other, and whenever that happens, I just feel very uneasy. I like to see them trading together as much as possible. And also this Stokes reading here, I don't like this because the more that we hug the floor, people can say, "Oh, we've bottomed out on the Stokes, so we must have upside." No, that's not that's not the case. Just like what I was talking about in 2018, let's see if we can find some place that we were just kind of like hugging the bottom, right? Like even though we turned up to the upside temporarily, we were hugging the bottom. So when was this? Let's find out. This was right here, right? So this was when Bitcoin was just hugging the bottom. And you can just see that it was a continuous drop to the downside. And then it was just sideways action for months and months and months, right? Even though you got a nice pop here to one of your higher levels, you're not really sure if you're in this downward area or if you're in this sideways area. And just again, to emphasize it, that's this point where, let's just go ahead and get this date range. For basically 30 days, you had this kind of flat area on the bottom there. And right now, we are approximately, let's say there. So we still have some time to go. I mean, and it depends where you align it, but you can see the bottom of the market up here was approximately 30 days. And you can understand that these kind of business cycles and these Fed decisions and things like that work on kind of 30-day increments. And so you can see that we're coming up to a decision point pretty soon where this market might, have a temporary bump and then come back down, or it could, spike back up and just start curve up right now, or it could just, hang on to the bottom, for another, half month, another maybe even month. And, we just understand that this could potentially continue our direction to the downside during this phase, sort of like what happened in 2018 during the capitulation phase, right? So let's see, where's that one? Over here. See that? And if we do get one of these kind of massive spikes in the Stokes, then we can say, okay, maybe, maybe we're going to have a nice corrective run before we come back down and then perhaps go. But, we're not even done with this thing yet. So in our current situation, so we are still capitulating. And, if we look at the volatility over here, it is interesting just how different it looks than our current setup. We did have a spike and then a general cooling off for a considerable amount of time. And we do have that big spike, but it's interesting. It just the setup to it is completely different. So there is something different about this current situation than the previous situation, but you do have to be, on your toes and just be aware. that there's potentially more overall to the downside, and that perhaps we're not going to get any, real upside action anytime soon, and that we may just, you know, end up chopping this volatility out, potentially even until we finally take off, months later. And that the Stokes could do something like this. Perhaps we have a little bit of a run, and then we come back down while the market is kind of, still playing out the capitulation, and then starts the accumulation phase, right, over a period of, months. But this pump may not even happen. I mean, you could literally just chop sideways and then slowly start to go up, sort of like what happened here, right? All right, guys, I hope that you enjoyed your 4th of July. We did get a nice pump. 7% is, nothing to sneeze at. And so if you guys were able to capture that move with me, then congratulations. It was a very difficult setup. I mean, if we just go back and just look at the crazy way that price was moving, I mean, nobody expected this just straight up candle, which basically happened over the course of like 1 hour, and then an immediate retracement. And then that could scare anybody. That type of roller coaster action could scare anybody. It could liquidate a lot of people who don't have stop losses. And, then to make a higher low, you would have to have a considerable amount of bravery. And, to take your profit either at this resistance or this, this resistance, and really cash out even though we're trending to the upside, that also takes bravery. You have to make the decision to take your money, to take your profit when you believe that we could be continuing to go up further or perhaps further again. And you never know just how this market is going to move. So please do take your profits. Always be selling if you're in a long direction in this market, just because it has been relentless and brutal to the downside. And there does appear like there is more downside potentially to go. This market doesn't look like it's done with the downside. The Federal Reserve doesn't look like it's done with interest rates. Inflation doesn't look like it's under control. And so if we just had, you know, a couple more Federal Reserve meetings of, increased interest rates, and then perhaps later at the end of the year, perhaps some reprieve or some pullback on the harshness of their policies, or, if we talk about bonds and all of these other factors that go into the economy, not just interest rates, um, we just have to wait a little bit more. Okay, it's okay to be on the sidelines. There's no accumulation pattern being put in on the macro. You don't have to feel pressured to be doing anything. And whenever we take these little trades, please do subscribe to the Discord. The link is in the description of the video, because there might be updates, for example, to take your profit or whatever, and other members may have insights for you. And so it's kind of a bit of a teamwork thing. I'm not taking responsibility for your trades. These are just literally my own things. None of this is financial advice. But of course, this channel is solely so that I can improve myself during the bear market. I think only lazy boys leave the market during a bear market, and then they come back during the bull market thinking that they can just put their money into the casino coin slot and make profit at the end. But those guys usually end up just losing everything. And so it's better to educate yourself now. It's better to practice now. You can safely do that in the Discord if you would like. It is free. It's just open, and of course, if anyone is causing trouble, I'll just kick them out immediately. But otherwise, feel free to contribute there or ask any questions, even if it's dumb or whatever. Since it's a free forum, nobody is guaranteed to answer every question that you have. and people might be talking about their own things, but again, it's just a way to have a little bit of friendly support and maybe get some type of updates or thoughts in case something concerning happens, like when we broke trend. When we broke this uptrend, where let's say that you bought in here on this higher low or this double bottom, whatever you want to call it, and then we rode this thing up on this trend line, and then when we broke down, you know, then that would have been a good point to just exit this trade to the upside because we started to break down, and you would just want to get out, and you might want to ask somebody a question immediately, right? So again, that's why these type of groups are good. And then if we did find support down here on this trend line, and then we can say, oh well, we still do kind of have an uptrend. It's very weak, right? It's very weak, but maybe the new profit area is right here, maybe around 20,000 if we do get up here and get rejected, if we are going to pump, and maybe that's just going to be, another lower high unless we get up here above that 20,500 and then we have the potential to pump. You might have questions about that stuff, right? So I don't take responsibility for your trades. I'm not trying to be your financial advisor. Please get your own financial advisors, and you can, take trading courses and whatnot. I'm just going to continue to update my thoughts on this YouTube, and if anyone can take advantage of that while I improve myself in order to be a more powerful trader during the next cycle, then you are welcome to share that journey with me. So again, guys, that was your alpha for the day. Stay safe and happy trading.